Balance your trading strategy by adding futures. CME Group helps you manage risk and capture opportunities in all market environments. Capitalize on around-the-clock access to highly liquid global futures and options market across all major asset classes. Just visit your online broker and get started. Plug into valuable educational materials and trading tools and see what adding futures can do for you at cmegroup.com/onthetape.
Hey, this is Dan Nathan. You're listening to the podcast version of Trading Spaces. It's a live Q&A that I do with my On the Tape co-host Guy Adami every Monday and Wednesday at 1 p.m. Eastern on Twitter Spaces. We hope you enjoyed this episode, and thanks as always to our presenting sponsor, CME Group. Here we are, people. It's 1 o'clock. It's Monday. It's January 3rd. I'm Dan Nathan. That's Guy Adami right there. We do Trading Spaces every Monday and Wednesday at 1 p.m. Eastern. They're sponsored by CME Group. They're the sponsor of our podcast, On the Tape podcast, that drops every Friday. We do that with our good friend Danny Moses. So please check that out in the podcast stores. You can check out recordings, Guy, these Trading Spaces in the podcast store under Trading Spaces. Yes, and they will be there under their own podcast kind of nation. So please follow that if you want to hear this stuff again, okay? And I will also ask everybody, if you have a question for Guy and me, let's kind of keep it down kind of the middle here. We don't do altcoins and we don't do really small cap stuff. So kind of keep it as something that you think the audience might really enjoy listening about. But tweet those questions to us at _Trading Spaces or at Amanda Diaz. She is our crack producer, our head of content at Risk Reversal Media. All right, let's get going here, Guy. There's a lot going on in the stock market right here. I mean, you and I were just talking a bit before. You had this great year in the S&P 500. I think when you add back dividends, it was close to 29% higher on the year. Here we are. We have a market that is higher because it is open, as you would say, but it's getting a lot of help from Tesla, which has just regained, I guess, that $1 trillion market cap mark there. It's become a big stock in the S&P 500, Guy.
Very important stock as well. I think technically it's done everything it should have done. I mean, we've mentioned it a number of times now, but we thought it would do that back and fill down to the $900 level, which was the prior all-time high from February of last year. And that's exactly what happened. As Carter would say, Penny, it happened, and now it's subsequent. I mean, I look at it here, and I think it's set up to take out that 1240 prior all-time high, which isn't saying a lot, obviously, at this point. But I think it's going to do it in relative short fashion. I think you can continue to see a grind higher. So, I mean, for you armchair technicians out there, I think Helene is here. In my opinion, Tesla's done everything right. The other thing you have to look at is the performance of the banks. Obviously, a lot of hit and misses with banks over the last few months of the year, but the move in 10-year yields, again, I don't want to make too big a deal out of it, but a 10 basis point, 11 basis point move in a 10-year is pretty significant. Now north of 1.6%. I mean, 2 weeks ago, Dan, we were trading at 133.
Yeah.
It's, again, the volatility in the bond market to me is noteworthy. And I see Porter Collins is on here, and I'm sure he's nodding his head in agreement, because at a certain point, that volatility in the bond market should make its way into the
Well,
equity market.
I think it is today. I mean, that is the story. If you look at the banks, the way they're screaming, and look at the way home builders are down. I mean, I think that has something to do with that. Home Depot and Lowe's on the back of some of the home builders, pretty weak here. I just say this, Guy, a year ago today, the 10-year U.S. Treasury yield was below 1% and went screamed right up to 1.75. 1.77 was the intraday high in late March. And I guess the point, Danny Moses, our partner in crime on the tape, has mentioned this on numerous occasions for months now, is like, stop looking at the 10-year, really focus on the 2-year, because that's really the one that's, really driving the train as it relates to what the Fed is doing with quantitative easing, their taper of, and then the expectations for rate hikes here. So, Fed funds is pricing a pretty decent chance right now of a rate hike in the March meeting. We know they have the Fed's meeting in January. I just say this, that Guy, right out of the gate, I mean, let's talk about OPEC Plus. We're going to get some commentary this week, and then we're also going to get The jobs number, the December jobs number. Now, obviously, this variant is done a number on some expectations as it relates to, probably hiring and as it relates to economic activity. You've seen a lot of GDP estimates come down for Q4 and Q1 already. But those two things, a tight jobs market and higher prices for commodities and other services, are really the main right here as it relates to what the Fed is likely to do in the next few months.
They can't backtrack at this point. I mean, they have to be steadfast in this about face they did basically a month and a half or so ago, and I think it's long overdue. I think a lot of people probably agree with me. So I think I look at crude oil, and I think we're going to have triple-digit crude. I thought would happen at the end of 2021. That obviously didn't happen, but I think crude's going to continue to be a story. And then I look at some of the names today. I'm Schlumberger up 5%, PSX up big. So energy names making a move. I think energy is a real story. And again, the job market is. I can't believe that anything can happen right now. And just again, my opinion. I think the variant, we've learned how to deal with it. And I think we're going to get on the other side quicker than people think. The airline stocks, by the way, and the travel stocks are suggesting exactly that. I think the Fed has no choice, and we'll see what happens. Now you have 2 years, to your earlier point about what Danny's watching, either side of 80 basis points now. I think you're going to see that spread, that 210 spread, come into about 30 basis points. And I said it's probably going to be about 140 to 170 or thereabouts, and we'll see if I'm right. But we're going to get close, and I think it's going to happen quickly this year.
All right, fair enough. Talking about what's going on today, I mean, a lot of things are moving around. The semiconductors, which the SMH, the ETF that tracks them, which is heavily made up of NVIDIA, and a lot of its outperformance last year had to do with its 130% gains in NVIDIA, but also Taiwan Semi. This is really interesting because that is the largest component of the SMA. And it was basically, I think, unchanged or up or down a few percent in either direction. Taiwan Semi, right out of the gate, a big foundry, up 6.5%. Semis are up close to 2% here. And when I think about tech in general, the CES is going on this week in Vegas. There was, a lot of questions whether it was going to go on or not. And really, is it important as it relates to tech investing? Not really. A lot of companies are out there and they're doing a lot of meetings. And these are like pre-earnings meetings. And, they're generally not giving out too much information. But I think the body language is important. But to me, what's really fascinating about tech right here is that look at Apple out of the gate up 2.5%. Look at Amazon up 2%. Google and Facebook up a little bit. They're underperforming the market. Microsoft, though. Microsoft and software in general acting very poorly today. And then a bunch of those high valuation kind of SaaS names also getting hit kind of hard. So I think that's kind of an interesting dynamic in tech. Any thoughts there, Guy Adami?
I think it's on the back of rates is my sense. I mean, high valuation names in that space specifically, I think are going to fall under, there's this sort of Damocles out there in terms of yields for those names. And I think as long as yields 10-year stays in this sort of 1.4, 1.55 range, I think they're fine. I think once you start getting outside of that, I think there's concern. So to me, at least for today, that's what you're looking at there in terms of those names. And I think it's worth watching. I mean, it's amazing. Again, broader market is impervious, and the word I'd obviously love to use to everything. But under the surface, you have this jockeying of position with so many different names. It's really interesting to see that the broader market doesn't seem to care. But again, under the surface, there's a lot of damage.
Question, Guy. So in the last, I want to say month, I don't know if you saw XLP. It's the ETF that tracks consumer staples, Procter, Johnson & Johnson. Those are big names, Coke and Pepsi in there. That traded on the day of December down to 70, and it closed yesterday, on the 12/31/21, so the last trading day of the year, at 77.25. Okay, so that was a huge move, about 10%. You could do that math. Yes, I just want to make sure that we're on the same page here. And then in utilities, the XLU also had a similar sort of move. Now, to me, you and I had talked about that on a couple occasions in December. That was not bullish to see those two groups have that sort of move from the start of December. The XLU went from 66 almost up to 72. Again, a big move here. What do you think that was saying, about kind of investors positioning into 2022?
It's amazing. I mean, but you just mentioned the XLP. You had that obviously downdraft, but I mean, we're within a whisper of an all-time high. It's so hard to figure out what to make of any of these things. And utilities, it's interesting you bring that up. You look at that and say, what is that suggestive of? And I don't think it's particularly all that bullish. But again, maybe it is some new paradigm that I'm not aware of. We're talking about an S&P 500 that's within an earshot of 4,800. What's the all-time 4,808? I mean, it feels like it's a foregone conclusion that 5,000 or so is in the crosshairs for early this year. So I don't know if bringing up these sectors individually has the same gravitas as it did maybe 5 or so years ago, Dan. I don't know. Maybe I'm
all right. So here's one that I think is important. It's like on a lot of investors' kind of minds in the first trading day of the year. When you see certain groups that had massive outperformance trade down really hard early in the new year, and I'm looking at big pharma right here. Okay, so Pfizer obviously went from in October in the low 40s. It was traded as high as the low 60s just a couple weeks ago, getting hit nearly 4% today. Moderna, I think, was the best performing stock in the S&P last year, despite a huge sell-off, right, from its recent highs, down 8%. Do you think this is literally just investors kind of holding out with gains and waiting until the new year for tax purposes?
I'm not sure what it is, or maybe it's something. There's this concern that again in 2022, big cap pharma is going to be under the microscope in terms of the amount of money they're making, those types of things. You mentioned Moderna. I mean, it's amazing that even with the move that they had, this was a $497 stock. I want to say in September or right around there, August. So I'm close. And here we are, 233, and seemingly about to take out that recent low we saw. But I think 230 was about 230. I don't even know when the recent low was. I think it was below 230, 225. Yeah. So it's remarkable to me. I think they're the have and the have-nots. Eli Lilly's getting whacked today. I'm not certain why. I'm sure there's a story. I haven't looked at it. But I do think there's going to be a place for big cap pharma. I mean, Pfizer, and you mentioned Pfizer early last year as a name you wanted to be, and that's proven. I'm not sure what's going on here, but we played a game of Trade It or Fade It last week on Fast Money, and Moderna was one of the names that I got, and I'm like, look, I was a Moderna fan, but I think you got to fade it, and I think it probably trades down to, 180 or so, which was the prior all-time high way back in February of last year, Dan. Of last year's.
Yeah, it was. As of rates, I'm going to go back to a couple areas here. I want to go back to crude. You mentioned oil. You mentioned energy as being a thing. And so I'm looking at the Dixie Up guy, and I'm looking, so it's a U.S. dollar index, and I'm looking at rates, which we just talked about here. So in your mind, if rates are going to go higher, okay, and let's just say the Dick has a magnet to that like $100 level, okay? So you have higher rates, you got a higher dollar. Can crude really go up that meaningfully, in your opinion? And again, it traded as low as the mid 60s or so on that recent downdraft with this variant a couple months ago, or it feels like a couple months ago, but it's really just in late November, early December here. So just your quick take on my history, and that I'm just like a creature of habit here. I just remember in 2013 when the Fed started to contemplate tapering their QE, and then they raised rates in the next year or so. I mean, dollar went up, rates went up, crude oil got absolutely slayed, right? And so to me, I know this is different because we have this weird scenario with, just the fits and starts of the pandemic and global economy and the way it might reflate, and it may be spotty in my opinion. I look at that crude oil chart, guy, and I see the right shoulder of a Head and Shoulders top forming. And if you want to take this bet, 86, I'm looking at 729, okay? If you wanted to take this bet, 86 or 66.
Yeah, I mean, I'm going to go I hate to say it's different this time because I just hate that phrase. And you're right. I mean, a rising dollar and higher yields suggestive of crude that's going to have difficulty. This will be my answer. I just don't think it's going to go up as fast as it probably normally would, but I still think it's going to grind higher. Look, energy was a story all of last year. It had a rough summer, obviously, and then in November you had the SPR release from the administration, and you obviously had the Omicron variant became news that Friday after Thanksgiving. That obviously knocked the wind out of the crude trade, but it's back on its horse, and I just think crude's a story that nobody wants to talk about. So I think higher.
2 months from now, okay? Let's do let's do $1 a point, okay? From you're higher, I'm lower. All right. I think 66 before 86. You want to do that? Little.
I don't know what a dollar
Well,
point
like
means,
so
but if it's a
against it.
$10
So
bet,
yeah, it's a
yeah.
$10 bet. Come on, we're not big time. We're pikers, as you know. All right.
No, much different, by the way, and on the tape with you and
Oh
Danny
my God,
Moses, which
I'm
has
getting
just
abs.
been. What was he this weekend, by the way? Not to
He won both
deviate,
of his
but
picks, and so I think he's like 25-3. He
he's
lost
so
on his
now
teaser.
he's 24-3.
Yeah.
I mean,
I got a bit of a problem against him. I got to tap out at 10,000 and I'll be done. But I have until the Super Bowl, so I gotta do some stuff. All right, but real quickly, guy, on oil stocks, you just mentioned the OIH, the oil services. I think we did a show last week. I think it was on a market call where you're one of your top picks was Halliburton for
yeah.
2022. So I'm seeing Hal having a big move. I'm seeing the OH outperforming. So, I mean, listen, I've not been bullish. Ned Michael's not going to be particularly happy with us. I think he closed out of his OIH position. He just got sick of my bearishness. Part of my point was that it just hasn't anywhere. And it's acted
No,
very
I know.
poorly relative to crude oil's bounce of late. So curious your take on
All right, so if you look at OIH from a technical standpoint, 170 or so has been support a couple times. If you look, we traded down there basically in the beginning of December. We made another push now. It seems to bounce off those levels, and we're in this very defined sort of 170 to 220 range, and you've obviously had some move to that 220 level. I think it's too cheap. I mean, if you look at the big three components of it, Schlumberger, Baker Hughes, and Halliburton, I mean, I know you don't look at these names specifically on valuation, but you have to incorporate valuation at a certain point, and they're just too inexpensive. And I think Halliburton, you mentioned that was one of my top picks. I'm going to stand by that. But I think Schlumberger is too cheap as well. And I think this OIH, which again has been in this range, is on the next leg again to that 215, 220 level. And we'll see what happens if and when we get there. But you've been able to trade that range really well in this entire year. If you go back and look, it's not unlike what we saw in the IWM. There's a very well-defined range that's been trading in between. And I think we're going to break out of it. And you think we're making a tremendous head and shoulders. I mean, that's what makes markets.
that is what makes market. All right, let's hit the broad markets, though, guy. Let's look at this S&P 500 really quickly because we know that we had this really sharp bounce over the last few weeks, up about 5.5% or so, making a little bit of a flag above that kind of consolidation, about out level here. Does it continue? Do we just have a runaway breakout? And listen, I know that there's been a lot of comparisons between the bifurcation in the markets with some of the bigger names and then just a lot of everything else that's acting very poorly. You and I spent the last couple of weeks quoting some tweets about underperformance in the NASDAQ relative to the big mega cap leaders, what percentage of them were above their 200-day moving average. And really all of it speaks to the fact that the breadth was narrowing, right? And so here we are, though, like I just mentioned, to start the year out, and we have Apple up 2.5% and Tesla up 11%. And, again, you have this situation where, if I look at the S&P 500 guy up, 20 bips right now, I say to myself, okay, like with those names, Apple being the largest and some of the other biggest components, Nvidia is up, nearly 3%, obviously another big one. Are we bound for the same thing where it's just like 10 names that make up a disproportionate amount of percent of the broad indices, the NASDAQ and the S&P 500, do all the heavy lifting? Or does it set up for a really, really sharp sell-off? And I take you back to Q1 of last year where the S&P sold off about 5%, the NASDAQ sold off 1.5x that. But some of the biggest names, Apple sold off 20%, and people don't think it can happen again. But the longer we go like this, the more distance we have, the more concentrated these positions, the more dangerous it actually happens if everyone heads for the door at the same time.
Does happen. It's happened a number of times. And so there's this interesting, and I've never said this on the show because I hate these stupid sayings, but people do use them. And, it's interesting. People will come on and basically say, don't fight the Fed. Okay, I get it. And when they say it is when the Fed is in this easing cycle and money's easy and don't fight the Fed because the market just goes higher. Well, if that's true, if the mandate or the mantra of don't fight the Fed is true, then it should be true the other way. And they're completely doing a 180. So if you're not fighting them one way, you shouldn't fight them now. And what does that mean? Well, maybe the market is ahead of itself. And if the Fed has now changed course, if you don't want to fight them the one way, it stands to reason that you wouldn't want to fight them when they go the other way. So that's what I would say. I think the worst thing that can happen to the market this year is if you see this early in the year blow off top to the upside, where we maybe print 5,000 in the S&P 500. I think the best thing that could possibly happen is you get that long-awaited 12 to 15% downdraft on the back of God only knows what, and that sets us up really well for the back of the year. So, again, I don't know if I'm answering your
No, you
question,
are.
but
I mean,
we're setting up for a really dangerous period of time because the same people that say don't fight the Fed when things are great and the market's going higher. Well, it stands to reason they should be the same people that say, well, the Fed changed course, we're not going to fight them now.
yeah, I guess the one thing that they got going for them is that the market's done this. Rates have gone higher. Commodity prices and stuff, inflation in generally, are higher. The stock market continues to go, in this direction where it doesn't seem to matter. If anything, it seems like investors are pretty happy about the fact that at least the taper is happening, at least by the price action in the stock market right here. And this is assuming that there are no other variants in the near term. I mean, listen, all of this growth that's been clipped off of Q3 because of Delta, Q4 because of Omicron, and Q1 because of Omicron. If you're expecting to get it back, you know what I mean, at some point in Q2, Q3, I mean, that was the story in 2021. So I'm just not sure that happens. I suspect that we see inflation lower than people expect, and we see growth lower than people expect in 2022. All right, last thing before we take some questions, because I know Amanda's got a couple. Crypto guy, if you're looking at what's going on right now, you have Bitcoin, which is just below 47,000. It's in the middle of this range from the July lows that was about 28,500, and then those highs, which are, I don't know, about 67,500 or something, just in the beginning of November. It's below its 200-day moving average. It's down 33% or so from those highs. We know that last year there was a 55% peak to trough decline, and we made new highs from there. But generally, the underperformance of Bitcoin relative to Ethereum is the big story. When you have Ethereum now down about 23% from its recent highs, and it looks just technically a lot more constructive. Any thoughts on two? Okay, what does it mean for risk? Okay, now, like, if you looked at Bitcoin at $880 billion market cap, that's basically, I don't know, like a Facebook or something like that. Ethereum at 450, that's like a JP Morgan or something. I mean, like, these are not small sort of things. Now, my question, the assumption is they're not in any equity indices. They don't really matter. But a lot of people who have risk in these markets have risk in the stock market, right? And they're also, a lot of these people in crypto are buying Bored Apes for 150 grand that could tomorrow, for no reason. There's a Twitter space going on right now, and I'm not trying to give any life to it, but it's like Bored Ape Yacht Club racism problem, and there's 2,200 people on that. And so, I mean, at any moment, one of these things could kind of blow up. And my only point about bringing NFTs, and I find all of it fascinating, and I'm in for all of it, I'm really interested in all, but these are financial instruments, even the NFTs, the profile pics and everything like that, and people are paying money for these things that could be going to the stock market, could be going to savings, could be going to pay their rent. So I'm just curious, as we go into 2022, you saw Ethereum massively outperform Bitcoin in 2021, although Bitcoin did well, up 60%. Thoughts on crypto as it relates to risk in general, Guy?
Well, I've incorrectly thought that a sell-off in crypto would lead to a sell-off in the broader market. Now, maybe I was just wrong in terms of what the sell-off was going to be on the back of. Maybe it was going to be a sell-off some of these high growth, high valuation names. Maybe that's the connection, right? Maybe it's some of these names that have gotten whacked anywhere from 30 to 70%. And maybe that's where the correlation is. I've thought that the correlation was going to be to the broader market, specifically the NASDAQ. That hasn't come to pass, but it has come to pass maybe in some of these more speculative names. Obviously, I believe that crypto is a hugely speculative asset, commodity, current, whatever you want to call it. And maybe they are linked to some of these higher growth, higher valuation, more speculative names. And maybe that's where you can draw the connection and stuff. But again, at a certain point, I think it has to factor its way or find its way into the broader equity market, and we'll just see. But it hasn't happened yet.
No, it's notable, and one of the reasons why is, like, you've been in the markets for decades and decades and decades. You know how I did that? See what I did there?
Yeah.
And it's always
true. It is,
but it's worth noting these pockets of exuberance, right? That are like kind of in and around, and it's not just crypto stuff. I mean, look at housing, look at fine art. I mean, anything that's not, kind of bolted down has had tremendous returns. And so the question is, yes, you better pay attention to what rates are doing, because that is a really important part of it. All right, let's get to some questions here. Amanda tweeted out some requests for some questions. Here's one guy from @BobbyBender19. Okay, Uber and Airbnb.
By the way, I love Bender in Breakfast Club.
Club.
Anyway,
I cannot believe that you saw that movie. He's also what was his character in Trading Places?
He was in St. Elmo's. He wasn't in Trading Places.
Yeah, he was.
You're talking about Beeks. Bender.
Oh, I'm talking about Beeks. Yeah.
Anyway.
Bender was Judd.
That's right,
Judd Nelson. There you go. All right, Uber and Airbnb both have come out and said business is good. Airbnb announced sizable bookings above pre-COVID in Q4, both $20 lower than mid-2021 levels. Thoughts? Well, $20 on Uber and $20 on Airbnb are different things. Guy, hit it.
Well, obviously, I mean, that is true. Airbnb, so we came out with our, what do you call it when you link letters together, Dan?
Acronyms.
Acronyms. Yeah, we had last week, they asked us to do, 2021 was my hope trade. That actually worked pretty well. 2022 is my dawn trade, and the A in dawn is Airbnb. And look, Airbnb has gotten whacked, probably for good reason, like a lot of things. I think it was trading north of $200 in November, traded down to $165, but it's getting off the mat. And I think Airbnb is going to surprise. If you look, all the airlines, and I'd link airlines with these travel names, which Airbnb is one, they all topped out in April. Well, they're all getting off the mat now. And they topped out when the news was at its best for the vaccine. And they seem to be bottoming out when the news is at its worst. So don't be surprised to see Airbnb significantly higher. I'll say this about Uber. When you play the Would You Rather game, I like Lyft a lot better. And I think Lyft's a better company. And I think their pathway to profitability is a lot clearer. And if you go back and look at the last quarter they put up a few months ago, it was extraordinary, except the stock didn't trade like it was. And I think the stock is finally starting to figure it out.
Well, it traded briefly, really, really well.
Briefly.
No, I know.
Like hours,
and I'll
briefly.
but it traded up 10, 15%, and then it just got lights out. It's interesting if you look at that chart, maybe Amanda will throw that up there, that $45 level all year had been huge technical support. It blew through there. It went as low as 37 or so. Now it's back up against there. It gets to 45. I mean, that quarter, as you would say, Guy, was ridiculous that they reported in early November. So we're not going to get their announcement until February. We did have Logan Green, if you recall, the co-founder of the company on Fast Money.
Yeah.
I think it was early December. And you asked him a question, which we don't ask CEOs too frequently on Fast Money, but you basically said, based on the results that you had, can you explain what's going on with the stock? And he pretty much flat out said, I think the stock is way overdone. It's too cheap. And we don't hear too many CEO, founder, chairman types to say that sort of stuff. But also, I will tell you that you and I did not collude on our acronyms for Fast Money. I also had Airbnb. I had AARP in honor of your most recent birthday.
Appreciate it. Well, that's a big year for me this year.
I had Amazon, I had Airbnb, I had Roblox, and I had Palantir. That was one that you had in your acronym for 2021. I'm going to take the handoff from you there. All right, so that was my take. So I like Airbnb. I also like Amazon a lot. I suspect that outperforms Apple, Google, and Microsoft this year. All right, let's see if we got another question here. Here's one guy from Jake Long. Okay, Jake
Great
Long.
football player. I think one of Howie's sons. Welcome.
He could be. He's got a podcast, actually. He's really funny, too. He's good. He said, would like to buy Alibaba, but am hesitant and on investing in Chinese companies with the unpredictable regulation. Guy, what do you got there?
They're all trades. And, you're trying to find a window where you can trade it. And last week we did trade it or fade it with Baba. I think Alibaba was trading 113. I said, look, I don't think the news cycle is over, but I think there's a window to trade it. And I think you trade Alibaba, and it's in a very well-defined downtrend from the Halloween of 2020 when the stock was $310. But along the way, at least 5 or 6 times, you've seen 20 to 25% bounces to the upside and still in this downtrend. And I think we're in that right now. So Baba's 121 right now if I'm looking at it. I think there's a chance you could trade up to 135 and still be in this very well-defined downtrend, and I think that's what's going to happen. So if you're asking me, I still think there's room to the tune of about another 11% or so.
All right.
On the upside.
I got one for you. Listen, I've been wrong on Baba on numerous occasions over the last year, and I've been absolutely shell-shocked by just the violent move, consistent every rally. And there are sharp rallies. There are bear market rallies, but they get sold and it makes new lows. Here's one name. The stock went public last year, Didi. And when you look at this stock, guy, on November 15th, it was trading, I don't know, $9.50. Well, here it is at 5.25-ish or so. It's right off of its recent all-time lows, just that it made, last week or whatever. I mean, if there's ever a reason for this stock to go up, it's going straight, above 6 and maybe to 8 where it broke down or something like that. So that one is kind of interesting. I know the Wall Street Journal had an article this morning talking about the performance of the Shanghai Composite, nearly $13 trillion in market cap, only second to our stock market. And so it was up maybe 4 or 5% of the year, but very near, multi-year highs, while U.S. listed Chinese companies have absolutely gotten creamed or so. So, all right, listen, guy, we got to get out of here. We took some questions. It was fun. Here's the deal with these trading spaces. They are going to be in their own podcast feed. So wherever you get your podcast, Apple, Google, Spotify, check out Trading Spaces. Please subscribe to it. Leave us a review. Share it. It helps people find it. That's really important. Also, thanks to CME Group. They are the sponsor of our Trading Spaces Monday and Wednesdays at 1 p.m. Eastern. They're also the sponsor of our podcast On the Tape that drops every Friday with our good friend Danny Moses. He's our third co-host. We also have a brand new podcast, OK Computer. You can follow that in the podcast store. We have a murderer's row of tech people, operators, investors, thought leaders who join us. We talk tech, the intersection between public and private markets, Web 2 and Web 3, and it's really been awesome. So please follow that in your podcast stores. We've got a lot of stuff going on. And then, Guy, Market Call. Look at it on our Twitter, the MKT Call. You can follow it on Twitter. We tweeted it out. We did Market Call charts with Carter Braxton Worth this morning. We're doing Market Call Macro tomorrow. Peter Bookvar is going to join us. That is sponsored by CME Group. Today was sponsored by FactSet. On Thursdays, we do Market Call Street Research, sponsored by FactSet. SoFi, Liz Young, the head market strategist at SoFi, joins us. That was a mouthful, Guy. Any parting words, buddy?
My God.
So follow it all. Enjoy our content. We enjoy making it. We appreciate you guys being here with us, huh, Guy?
No, I do as well. And listen, we definitely want to take more questions in 2022. We're working on it. We're trying to work with Twitter to make this thing a little cleaner for people, but we'll get there, folks. So thank you for joining us.
Yeah, thanks for joining us. We'll see y'all. Guy, I'll see you on Fast Money tonight, buddy. Thanks for listening to this episode of Trading Spaces, brought to you by CME Group. If you like what you heard, follow us on Twitter @_Trading Spaces and join our Twitter Spaces every Monday and Wednesday live at 1 p.m. Eastern.